Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you guys are new to my channel, we like to go over on a daily basis what's impacting mortgage rates, whether it might be something from the economic calendar, could be headline news, could be something geopolitical. Sometimes the market sentiment changes, so we're here to kind of give you guys what's the scoop on what's actually impacting on any given day. And we also try to give you kind of a little foresight as to what could impact it on the week ahead. So that way, if you guys are in the market of refinance or purchasing, you guys might be watching rates. Hopefully this information will give you the information you need to go ahead and determine if you want to lock in your rate or you want to kind of hold off to see if something better might come up. So a little bit about myself. I am a loan officer. I do work with the national lender. We're here to answer any questions you might have, whether it might be about mortgage rates, could be something about maybe different loans out there available. Um, in any case, we're here to help you guys out. We'd love to earn your business, so please do reach out. We'd love to be able to talk to you a little bit about how we can help you with your refinance or purchase needs. So without further ado, we'll just jump right into it. We'll start off with the economic calendar. Today we get the pending home sales uh, data. Now, for the month of October, so September was actually revised a little bit lower. This is 116.7 thousand seasonally adjusted units, and it was downward revised to 116.5. So basically 200 units, lowered by 200 units. Now it came in on the month of October higher at 125.2 thousand units. So 125,200 units here. Now that was a 7.5% increase. Now the week ahead here, forecast is this is a week we'll get jobs data. So on Wednesday we'll get the first data with the ADP, which is the private payrolls. Thursday we get the typical initial jobless claims we get every Thursday. And then lastly, Friday is where the big day will be, and that will be the by the Bureau of Labor Statistics, and that is unemployment rate and non-farm payrolls. So that will be for the month of November. So we'll get a better gauge as to what's impacting rates. Impacting uh, jobs during that time frame. Now, remember, we do get people around this time frame. We do get a big increase for seasonal jobs. So we'll have to see if how much of an impact that is this year. If people are jumping into the seasonal jobs, which are temporary for that matter, and to help out with the holiday shopping and everything. All right, so headline news: stocks are rebounding a little bit today. If you guys missed it, Friday was a pretty crazy day in the markets. Even though it was short, stocks tanked tremendously. I think Dow closed down 900 points. This was the most we've seen in quite some time. Um, Mortgage-backed securities we'll show here in just a minute how much of an impact that had, but a lot of it had to do with and it's still kind of rolling into today's data as well. Omicron. There was a new variant discovered in South Africa. There's concern. There's a lot of uncertainty. Because of uncertainty, there's that's creating a little bit of a hysteria, so to speak. They don't know if it's worse than the Delta or if it's about the same. They don't know. They're trying to stop the spread. So, and of course, we got uncertainty reactions from governments and stuff. So there's already a number of countries. This is first discovered in South Africa, so of course a lot of people are canceling any flights and not allowing any flights from South Africa to come to their country as a result. And we'll have to kind of wait and see what transpires ahead. But if it's anything like the Delta, it could be good for bonds, not good for stocks. That could help us out a little bit. So be prepared. Oil has come down. It dipped just under $70 a barrel, which is good news for us at the gas tanks. We've been seeing getting hit with inflation, uh, so that could help alleviate some of that in inflation data. Um, so in any case, let's move on to that to the mortgage-backed securities. See what we look here. So Friday, as I indicated, even though it was a short day, it jumped up 77 basis points. It brought us way up to levels we hadn't seen for this was last week, the short week since the Friday before. So we're back to those levels. We regained all that in that one single day here. Now today we did start off much lower. We're down at least 19 basis points. We're up just under 2 now. We're touching out the 25-day moving average. Now, the lenders that started on the East Coast that came out with earlier pricing are probably going to come in with a little better pricing since it's eased up a little bit. So you may see some price improvements for those. Those of us on the West Coast that are coming out with later rate sheets are coming in right about here, and pricing should be about the same. So unchanged from Friday's close here. So again, we got a little bit of a miracle that helped. Same thing with the treasuries here. As you can see here, it came in a lot higher. We were way down here. It jumped back upwards, and now we're back down to just under, just about 1.51 right now, just under this technical level and underneath the 25 and the 50-day moving average, which is good news for rates. And hopefully, it depends on this whole. Of course, we don't want to see anything go wrong with it, but if it continues to spook the markets, this what did I just say? The micro nova, the new variant of the COVID. If it continues to spook the markets, that could be bode well for us in terms of the bonds and mortgage rates. So hopefully prepared for some improvement. If not, they could shake it off, and uh, it could continue to worsen again. All right, just be ready for it. Here's the national average. Let's go into that. For the 30-year fixed, it's at 3.24%, and for the 15-year, it's at 2.62%. Now, these are for conforming limit programs, and they do have points built into them. So when you usually get rates, you quote them by an eighth of a percent. So that's why you see more like similar like an APR type of here, because points are built into these rates here. So again, these are just kind of an average of what's out there, and what a lot of things that go into pricing for a rate mortgage is a lot of different variables. It could go from your FICO scores to equity or down payment into a property, amount of that to uh, the type of property it is, if it's a single family versus multi units or condo townhouse, to also those who are occupancy, if you're primary residents moving into it versus investment property or a second home. There's different variables that go into it. So all these variables kind of coexist, and this is what determines it. So when you talk to your neighbor or your friend or family member talk about different rates, well, there might be a discrepancy because also loan programs, they have there's you know your scenario may not fit what their scenarios, and this is why it's not always feasible when you talk to other people why your rate might be different what they have. All right, folks. Hopefully this will answer questions. If you guys like these videos, please smash that like button and hopefully follow us. We greatly appreciate you guys viewing. And again, if you guys got questions, please reach out. We're here to help you guys. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.